So when we talk about IRS Form 965A, here's the approach I want you to really think about. This is how the form looks like. So we are speaking about individual report of 965 tax liability, and this relates to the Tax Cuts and Jobs Act of 2017. So this is a new piece of legislation that really is helping a lot of investors actually repatriate their income in this country, so and invest here in the States. So you can see that Form 965A has several parts. So we have Part 1, Part 2, Part 3, and Part 4. I want to first show you a Part 1. You can see this on the screen. So Part 1 actually shows you your estimation of how much you think you owe the IRS, your estimation of your tax liability. So it's a report of net 965 tax liability and election to pay in installments. And so part two basically talks about how much you've already paid. So it's all about looking at the delta between what you owe versus what you have already paid. And you can see it. So part two is called is titled record of amount of net 965 tax liability paid by the taxpayer. And the next screenshot I want to show you here, you can see on the screen here, you have this is a continuation of a part two. And so part two actually splits the amount over several years, actually over 8 years to be more specific. And so this is kind of straightforward. And at the end, you have to actually compute, you have to tally up how much you've already paid. And part three actually has to deal with the S corporation shareholder election. And this is so if you have if you yourself you're an S corporation shareholder, or you have someone in your team who is an S corporation shareholder, you need to actually specify that here and actually make sure that you actually apply the right sort of election. And so I want to show you also part four. You can see on the screen here. So part four actually is an annual report of deferred net 965 tax liability. And so it's more like a recap of everything. Okay. So long story short, if you have any question about Form 965A, let us know in the comment section and we'll get back to you. Not a problem. It's a little convoluted, so and more specific so we can't really give you a generic answer that applies to all situations, if you will. So long story short, Form 965A applies to the Tax Cuts and Jobs Act of 2017, and it really it really relates to the repatriation of deferred foreign income for a certain specified foreign corporation. So but you have to be a U.S. investor to qualify though. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. I want to dig a little deeper here. When we talk about Form 965A, we are speaking about a form that really allows you to do a lot of things. But I want to talk about the purpose first. So when we talk about Form 965A, this is a form that is used by U.S. shareholders of specified foreign corporations to calculate and report the amount of the transition tax liability. I want you to remember this concept: transition tax liability. Okay, so basically, you are able to transition actually to go from being quote unquote illegal to legal. And so Form 965A provides information regarding the accumulated post 1986 deferred foreign income of the foreign corporation and helps determine the applicable tax rate on that income. So this is kind of cool. And one thing I want to say here is that by completing this Form 965A, you as a U.S. shareholder, you're basically determining your share of the deemed repatriation income and calculate the corresponding tax liability. Okay, so this is kind of cool. And again, we are speaking about the transition tax liability here. And you have to pay this over 8 years and in some cases 10 years. So when we talk about Form 965A, we are speaking about several benefits. For instance, you have a repatriation of deferred foreign earnings. You have reduced tax liability. You have installment payment options. So the IRS allows taxpayers like you to pay the transition tax liability in installments over an 8-year period. And this is kind of cool. So you have time to breathe. You have time to manage your cash flow, your cash inflows and cash outflows. And you also have another benefit is that you have the adjustments of earnings and profits. So this is kind of cool. So you are able to have certain adjustments to your earnings and profits of specified foreign corporations. And so those adjustments can help you and other individuals accurately calculate the transition tax liability and ensure compliance with the tax laws. And another benefit is that you have compliance with with tax obligations in general. Okay, I mean, you know that the Internal Revenue Code can be pretty convoluted at times, and so it's really good to comply with the IRC by going through the 965A. Boss, I want to quickly remind you of today's topic. We are having a conversation about Form 965A. Now let's talk about eligibility here. So when we talk about Form 965A, what kind of eligible eligible taxpayers are we talking about? Because again, we are speaking about specified foreign corporations. So the eligibility to file Form 965A depends on the following criteria. So U.S. shareholders, transition tax inclusion. So we have to really think about that transition tax inclusion. This is kind of important, and you also have to meet the ownership threshold. So those three criteria must be met for you to qualify, for you to be eligible to file Form 965A. So U.S. shareholder, what do I mean by this? Well, first of all, you had to actually, so individuals who are considered U.S. shareholders of specified foreign corporations, the SFCs, are eligible to file Form 965A. And a U.S. shareholder generally refers to a U.S. person or entity that owns shares in an SFC either directly or indirectly. So that means you got to have a TIN, a tax identification number, or you got to have a social security number, or you got to have an EIN. Okay. And the transition tax inclusion. So if a U.S. shareholder has a transition tax inclusion, meaning he or she has untaxed foreign earnings of an SFC subject to the transition tax, he or she needs to file Form 965A to report and pay the tax liability. And in terms of the ownership threshold, we are talking about, it really depends. It can be 5%, 10%, 50%. Depends on the amount of control that you exert over the said company. So what I want to say here is that U.S. shareholders who meet certain ownership thresholds in SFC are subject to the transition tax. And the ownership threshold differs based on whether the SFC is a controlled foreign corporation, CFC, or a specified foreign corporation, SFC, other than a CFC. So it really depends on a case-by-case basis. So if you have any questions, please let us know. We'll certainly get back to you. Not a problem. We have done a lot of research about this, and we will talk about your specific case. Let me clarify for you the steps you need to really take to file this form 965A. So basically, you have a lot of stuff to do. So when we talk about Form 965A, first of all, you want to have all the documents that you need. So we're speaking here about you going to the IRS websites and downloading the most recent version of a Form 965A, and take the instructions of the instructions that are linked to that form. And you want to gather your documents. It really depends on your situation, but we're talking here about relevant financial statements, earnings and profits calculations, and other supporting documents. And because everything has to relate to the repatriation of the foreign income, okay? And so you want to fill out the taxpayer information. We're speaking here about your social, your EIN, or your TIN, your tax identification number. And you also want to talk about, you want to follow the instructions that will lead you to the calculation of your net 965 tax liability. Again, we are speaking about transition tax. So you have to have a clear idea about how to calculate your transition tax. And you also have to specify which foreign income is subject to the net 965 tax liability and which one is not, because not all foreign income is subject to the net 965 tax liability. So you have to be, but the form is pretty straightforward. You probably saw that when we started the show. I indicated to you how to actually do the calculation. And you also have to look at the part four that relates to deferred net 965 tax liability. So there is a portion that you can defer, and there's a portion you have to pay now. So this is kind of, and so when you are done, you just have to sign and date the form. Don't forget to date the form. You have to always date the form, and always retain a copy for your records, because this is how, just in case the IRS is asking for more, is asking more information, you are able to back up your claims and not a problem. And one thing I want to say also is that you cannot file this form electronically as of now. You have to file it manually. And I mean, a lot of we try to do this with most tax software, and they do not actually allow you to file this form electronically. So you have to do things manually. So that's why you have to really take you have to prepare things like a lot more in advance. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 965A. Let me give you a few considerations that you have to really keep in mind when filing this Form 965A. It's really important to keep in mind that you got to be eligible, right? We are speaking about a transition tax, so you got to be eligible. So eligibility means what? You have to be a U.S. shareholder who owns specified foreign corporations, who own stock, if you will, in a specified foreign corporation with accumulated post 1986 deferred foreign income. So everything starts from 1986 and goes all the way to 2017. Which is the date this piece of legislation was passed. Okay, and you also have to think about transitional tax calculation. So the transition tax under Section 965 involves calculating the deemed repatriation of accumulated foreign earnings, and this actually, when you think about it, this requires determining the accumulated post 1986 deferred foreign income and applying the applicable tax rates. And the thing is that it's always better, as I think I've said this throughout this show, to always enlist the help of a professional to kind of help you out, because those calculations can be complex at times depending upon your situation, and it's just a lot better to, if you want to get it right, that you have the help of someone who understands what he or she is doing. And also, you have to report foreign earnings. So Form 965A requires detailed reporting. I'm really serious about detailed, because the IRS is really granular in terms of the reporting. So we are speaking about detailed reporting of the accumulated post 1986 deferred foreign income of specified foreign corporations, and the form actually provides specific lines of reporting those amounts. You also have to think about the payment of the transition tax. So if you have a transition tax liability, ensure that you actually pay this debt by the due date specified by the IRS. Otherwise, you just expose yourself to interest, to more penalties, to fees, and so on and so forth. And you got to really also think about the fact that when you actually are talking about Form 965A, there is a possibility, if you don't know what you're doing, to actually miss out on certain forms. So you want to complete all the forms. And again, this goes back to you trying to reach out to somebody who understands what he or she is doing. So when we talk about this Form 965A, we are speaking about April 15th, which is actually the same deadline this is the deadline where you have to file this form by. This is kind of similar to your Form 1040. And so this is kind of cool, because you are able to, if you streamline everything properly, you are able to file not only Form 965A at the same time that you are filing your Form 1040. Now, if there is any question, if there is any concern, there's always a possibility for you to file something called the Form 4868. This is the form that allows you to actually move the deadline, the deadline all the way to October 15th. So you have 6 more months to actually breathe a little bit to gather your paperwork before filing the documents. Okay. So, but the form is a 4868. But when you file that form, whatever you owe, if you owe anything, you owe taxes to the IRS, you got to make the payment. Otherwise, you expose yourself, as I said a little earlier, to fees, the penalties, and so on and so forth. So you can extend the time to pay you can extend time to file, but not time to pay. Now, there are common mistakes that you need to avoid while filing Form 965A. So please understand the instructions and make sure that the calculations are correct, and make sure that you have the proper tax identification number. So we are speaking here about the instructions can be pretty convoluted, as you've seen a little earlier. I mean, first of all, 965A as a form is a pretty lengthy form, And there is a possibility for you to miss out on certain things. So when you do, make sure that you actually are able to read properly, to read the instructions properly, to know exactly what you're doing. And also make sure the calculations are correct, because the transition tax calculation involves complex calculations based on specific tax rates and the taxpayers' accumulated foreign earnings. So ensure that you accurately calculate the transition tax liability and any related adjustments or deductions. So those adjustments or deductions can pretty much make the calculus more complicated, especially when you are in a certain when you're dealing with multiple foreign entities and multiple countries. Okay, and also make sure that your numbers, your identification numbers are correct. We are speaking about your social, we are speaking about your TIN, and we're speaking about your EIN. There are other mistakes that you need to really avoid. So for instance, when you have inadequate documentation. So it's one of those things where when you actually are trying to back up whatever you claim on a Form 965A, you got to have the right documentation to really support your claims. So you want to maintain detailed records and supporting documentation for all amounts reported on Form 965A. This includes what? This includes documentation related to the calculation of the transition tax, the determination of accumulated foreign earnings, and any other relevant financial information. And also, you want to report all required information. The thing is, you got to be thorough, though. You want to provide all necessary information. And so we're speaking here about the foreign corporations subject to the transition tax. So we're speaking here about their names, their EINs, and accumulated foreign earnings. So it's one of those things where you always want to be as transparent as possible. Also, make sure that you file Form 965A on time. And as I told you, if there is a possibility that you might be late, make sure that you request the automatic extension by filing Form 4868. You want to do it way in advance so you have some time to breathe, okay? And but again, the bottom line here is that if you're not really familiar with the tax laws, or you think you don't have time, or you don't have the resources, the intellectual resources to actually follow through, it's just always better to hire someone, pay that person like a couple of hundreds of dollars to really do the things right for you. Especially if you are talking about a significant tax liability, it's always better to pay someone $200, $300, or $500 to actually get things right for you, as opposed to exposing yourself to fines, to mistakes, to fees, to interest, and so on and so forth. I mean, if you have an expert such as a CPA, such as an EA, such as a tax attorney, that expert can really help you out, can really explain things to you in terms of what you have to do, what you shouldn't do, and also think about what really matters in terms of your ability to file on time, and your ability to pay your whatever tax you owe, whatever tax liability you have, to pay that over 8-year period. Okay, there has to be. The IRS gives you like an installment agreement, an installment program that allows you to pay your taxes on that repatriated foreign income, to pay it over time, but to actually pay it, you have to stick to the schedule that you agreed with the IRS. Otherwise, you are exposing yourself to more fines and fees and so on and so forth. Thank you so much for your attention. I really appreciate it. In today's conversation, let's do a quick recap here. I was talking to you about Form 965A. So I gave you the approach, the steps, and now the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.